Okay, I've got 7. Can we go ahead and start? All right, 7 p.m. We'll call the meeting to order. First item of business is the land acknowledgement. The City of Albany recognizes that we occupy the land originally protected by the Confederated Villages of Lisjan. We acknowledge the genocide that took place on these lands and must make strides to repay the moral debt that is owed to this indigenous people, specifically the Ohlone tribe. We thank them for their contributions, which have transformed our community and will continue to bring forth growth and unity. The City of Albany commits to sustaining ongoing relationships with the tribe and together build a better future for all that now make this their home. We have the roll call.
Yes. So Chair Trainer, Vice Chair Priven.
Here.
Member Bowman.
Here.
Member Kerr. Member Papalia.
Here.
Okay, item number 2 is the approval of the minutes from the November 1st meeting. Do we have a motion for approval?
Motion to approve.
Second?
Second.
So to vote to approve minutes, Chair Trainer,
Yes.
Vice Chair Priven,
Yes.
Member Bowman,
Yes.
Member Kerr, and Member Papalia.
Yes.
Motion passes.
Passes. Okay, item number 3 is announcements from staff or committee members. Do we have any announcements?
Only one related to audit. We were given a date from our auditors for the final version to be ready for the city, and that is January 12th. So I will follow up with the chair when it's received and when it can be made available to the committee, and we'll plan our first meeting for 2023 or 2024 around ample time for committee to review the audit ahead of that meeting. So so long as it stays to that tract, then hopefully February, but that's the main announcement from staff.
Okay, great. So if we have the draft available sometime on or about January 12th, and then the idea would be that that draft would be circulated to the members of this committee so that we have at least a week before the next meeting so that we've got plenty of time to review the document. And the next meeting of this committee will be in February. I think it's February 7th. So it seems like that timing will work if we can hold to that date.
Right.
Audited financials. So, okay, any other announcements?
I just have a brief announcement, and I'm not sure actually if it belongs here or somewhere further down the agenda, possibly on Subcommittee Reports of Revenue Subcommittee, but it's related to the school district's AUSD's decision to proceed with a parcel tax. So I'm looking for guidance regarding where in our agenda that might best belong.
Why don't we put that in the standing subcommittee section, which would be 6-2, and we can discuss that in the revenue subcommittee
Thank you.
update. Thank you. Any other announcements? Okay, so then the next item is the public comment section. Do we have any public comment?
We do have a virtual attendee, so Greg Bone, you have been unmuted.
Thank you very much. As we're getting near the end of this calendar year, I just wanted to take the opportunity to thank the committee for all the very good work you have done this calendar year. I think so many things have been accomplished that are very positive for the city. And I also would acknowledge Finance Department staff in this effort. I think it's been a very, very good year. I want to thank you as a committee and individually also. You're not paid for this, you volunteer, you're working professionals, and you're taking time away from other things that are important to your lives, family, social lives, and perhaps even time away from your respective professions to handle the business you're handling so well for this city. And as a member of the public, I just want you to know I'm very appreciative of the good work that you have done this past year. So I want to go through a few things. I don't know if I have time. I typically get timed out, but I'll put this on the front end right now. I want to wish you all happy holidays and a happy new year. And again, thank you. But what you've done has been tremendous. I ticked off 10 things. I think the California Asset Management Program is in play now, and you're working with PFM Asset Management LLC. That's a huge accomplishment. The city passed Resolution 2023-17, creating a pension reserve fund. In May, you got to preview the proposed biennial budget in advance of the City Council's reading, and that's obviously positive. The sequencing, very important. You received a CalPERS pension presentation from GovVest in May also. And in May, you, FAC, made a presentation before the council meeting, and it covered a number of budgetary matters, including increasing projected pension costs and the need for the city to be in a position to effectively manage these costs. June, committee members introduced to the full committee a first draft version of the Key Performance Indicators Dashboard to monitor the city's financial metrics. June also, 2 previously authored FAC reports dated 7/22/22 and 4/5/23 were included in Section 8 of the City of Albany's new biennial budget report, and that's huge in my view. And in June also, the City Council received a presentation from NBS Government Solutions regarding potential municipal revenue sources. At the same meeting, the city ratified a 10-year cooperative agreement with UC Berkeley for $600,000 per year. And kudos to the city manager for inking this agreement. November, you received a investment performance review from PFN Asset Management LLC. And tonight, you're going to review a debt policy draft review. So a lot of very positive things were done this year, and I think it's all helpful for the city's financial footing going forward. So thank you very much.
Thank you for your comment.
Thank you for that comment. Are there any other public comments? Okay, then I think we'll move to the presentation section. So item 5-1 is the debt policy presentation.
All right, so I didn't prepare slides. I thought I'd start off by just discussing regulation and best practices and recommendations, and then go into kind of a summary overview of the policy, then leave it open for committee discussion, and just kind of scroll through the policy itself as I go, and then as discussion progresses to the relevant sections. So to start off with some background, the California Debt and Investment Advisory Commission, that is the CDIAC, was created in 1981 to provide information, education, and technical assistance on debt issuance and public fund investments to local public agencies and other public finance professionals. This commission has 9 members. That includes the state treasurer, the governor or the director of finance, the state controller, 2 local government officials, 2 assembly members, and 2 senators. CDIAC fulfills a variety of functions related to education and compliance measures related to government bodies issuing debt. It is required also that the issuer of any proposed debt of state or local government shall, no later than 30 days prior to any debt issue, submit a report of the proposed issuance to CDIAC. So that's part of their compliance on debt. In addition, and I sent a kind of summary of a section of California law. It's California Government Code Section 8855, and I sent it to the committee on Monday, and that was kind of a recap of section from Senate Bill 1029 with the current language. Effective January 1st, 2017, that section was amended to also mandate that any debt issuer must certify that a local debt policy has been adopted, which is why the city did not previously have a policy in place, but we had issued debt in the past. Part of that requirement also mandates that the policy include all of the following, and that is the purposes for which the debt proceeds may be used, the types of debt that may be issued, the relationship of the debt to and integration with the issuer's capital improvement plan or budget, if applicable, policy goals related to the issuer's planning goals and objectives, and the internal control procedures that the issuer has implemented or will implement to ensure that the proceeds of the proposed debt issuance will be directed to the intended use. So those are the requirements as mandated by law. In addition to this, the Government Finance Officers Association, that's the GFOA, has issued best practices for government entities to keep in mind when creating a debt management policy. And some of those recommendations include requirements that guide the process of debt evaluation and debt issuance. The policy should improve upon the quality of decisions, provide guidance for the structure of debt issuance, demonstrate a commitment to long-term financial planning, and explain policy goals. The debt management policy should define debt limits acceptable for the specific agency, considering legal restrictions of the agency and other public policies which may have an impact. Debt structuring, management, and issuance practices should also be discussed within the policy. So those are, again, best practice recommendations on top of the requirements of the law. GFOA signals that following their recommendation and following policy indicates to interested parties that the government entity is well managed and so will follow through on its obligations. So with that in mind, this draft policy was prepared considering all of the requirements of the code, GFOA best practices and recommendations, and a review of over half a dozen other agency debt policies. The policy was developed to be as streamlined as possible to allow for flexibility while also meeting the various requirements. We have a municipal financial advisor that we recently entered into a relationship with, and the debt policy is currently being reviewed by them just to be sure that we didn't miss any piece of the recommendation, or if they have any or the requirements, and if they have any piece that they want to include in recommendation. But I don't anticipate there will be many edits at this point. So now to kind of go over a summary with that background, the purpose is the first portion, and this section can be summarized that the purpose is to maintain the flexibility of the city's finances while supporting capital needs. Capital needs are the capital infrastructure that are built and maintained by the city, for example, roads. Capital projects are large scale and costly to maintain and improve. The next section is the types of debt. So in this section, there's a pretty extensive detailing out of different types of debt that the city may consider and the purposes that debt can be utilized for. Starting with long-term debt, the listed purposes of this type of debt are assets which will extend beyond the maturity of the debt. Short-term debt, this type may be issued for purposes that long-term debt can be issued for, but can also cover cash flow requirements for operations.
Cassie, could I just stop you for a second? Would you prefer that we interject questions as you go through the document, or come back to those later?
If it's okay with the committee, can we have discussion afterwards?
Yep.
Like as a whole? Yeah, okay. The next type is refunding. This is similar to like refinancing a mortgage, so it may be desirable to reduce annual debt service payment due to lower interest rate or other changes in requirements. Conduit debt. This is the entity issuing debt on behalf of another party. If it's beneficial to the city, if the third party is deemed both financially solvent and able to repay the debt. An example of this would be a nonprofit agency that would like to construct low or moderate income housing. And so while this section does define out, again, multiple types of debt, it does also allow for other forms of debt without the need to amend the policy with council approval. And part of that is the streamlined approach. Any debt issuance will have to go to council for approval. So if we do kind of corner in and restrict this policy as written, we would need to go to council to amend and then go to council to issue the debt. The next section are the goals. So any issued debt must align with the long-term financial planning and prudent budget management of the city. Any financing should be the most beneficial option when considering cost. Good record keeping and compliance with all covenants must be considered. The city will evaluate alternatives, including the issuance of debt, interfund borrowing, and the use of excess cash reserves. Next, how it relates to the capital improvement plan. Again, issuance of debt should ensure that funds are available when needed for CIP priorities of the city. So again, trying to streamline that so that we can meet that need. Upkeep of normal wear and tear of infrastructure and facilities should utilize available operating revenues, not debt issuance. And debt should be issued timely to avoid unplanned expenditures from the general fund for capital improvements or equipment. Following this section, we go into issuance practices. This defines the methods of sale for each proposed issuance, and that the best method should consider market conditions and timing, bond type and complexity, and the cost. The goal is to have the most advantageous method for the city as possible, and our current municipal financial advisor, Urban Futures, as part of their presentation to us, they let us know that they do have the ability to run different scenarios to provide us with the most advantageous method for debt issuance. So that was one of the reasons we thought they were a good party to go with. The city may utilize independent parties for guidance, which is what we're utilizing our municipal financial advisor for. Also, there is a debt limit. The city cannot enter into debt exceeding the income and revenue in any year without receiving a two-thirds approval from voters. So pretty much there may be a few levels of approvals. All debt will go to council. Some debt will also go to voters. The final section are the management and internal controls. This discusses maintenance of debt-related records, internal controls to ensure compliance. Proceeds of the debt should be held by a third party when possible to ensure the integrity of the use of the bond proceeds. The disclosure section ensures the city is complying with all necessary laws, such as continuing disclosure. Those are annual reports the city already does for our current bonds and will have to do for any new bonds. We do have to file those annually. Statements to the public must be factually accurate, and appropriate training for city staff involved in the disclosure process will be maintained. So that's, again, brief overview. I wanted to keep it kind of at a summary level and brief to allow for questions, comments, discussion amongst the committee. If you want to start, Judy.
I just want to add a framing comment to this. I think probably it makes the most sense to take this section by section. So if the committee members have comments or questions on section 1, let's go through those first, please. Does anyone have comments on that section, the purpose?
So,
I mean, is that in the long-term debt section in the next?
yeah, I feel
kind of
that
listed
that's,
out there.
That's in section 2.
that likely may be, yes, discussing that you shouldn't. Yeah, that you shouldn't essentially take out debt that is going to be longer than the asset that you're taking the debt for. So that is a recurring. Yeah, I would imagine that's what that's referring to, which has happened, not here, but at other agencies in the past, so.
I think that's a really good point to have in there, because other agencies have done things like finance short-term assets with long-term bonds. So you're paying for 30 years for an asset that has been obsolete long before the bonds are paid off. Any other questions or comments on the section 1 of this? Okay, so how about section 2? Other comments and questions on the purpose and types of debt?
I had a question I really liked in the short-term debt, that it said not to, the last sentence there, not to engage in borrowing for the purpose of basically arbitrage. And I'm wondering, shouldn't that be in long-term debt in all of them, really? Because when we kind of dug into the pension obligation, it was kind of an arbitrage, right? It was kind of like you're borrowing and you think you're going to earn better investment income, and that's how you're going to pay back some of the pension money. And so it just hit me that kind of a restriction ought to be on long-term debt as well. I don't know.
It's an interesting comment, because in reviewing this, I'm thinking a lot about, could or would the council consider using this policy for pension bonding? And we can go into more discussion on that, but in looking at the first sentence of the long-term debt, it seems to be, that sentence is really restrictive. Long-term debt may be issued only to serve a public purpose and may be used to finance the costs of acquiring or improving land, infrastructure, facilities, or equipment, and then capitalized interest costs and costs of issuance and things like that. But it doesn't refer to other things like pension funding, for example. So how would that fit in if, and I'm not saying that I'm endorsing this, but if the council were to consider pension bonding, how does that fit into that first sentence on long-term debt?
And if I could just tag on to that, I had a question in section 6, because arbitrage recurs in section 6 of the document, and it talks about how the city has established internal controls to ensure compliance regarding arbitrage. So either it's precluded or it's not, and I think we should be clearer in our policy about that.
Yeah, I think in terms of long-term debt, as you mentioned, it's kind of restrictive, and short-term debt is what was left open for operations. I think that's where pension obligation bonding would likely land, because we're trying to free up general fund money for operations instead of it being absorbed there. So it may be worth bouncing off of the financial advisor if they feel that the long-term debt section is tight enough to address that concern. But I can see potentially having more restrictive wording in there, although, again, feels like it's more for assets or capital improvements, the long-term debt specifically. So maybe it's restrictive enough to kind of keep that from being an option.
So we're kind of mixing issues here. So one is kind of what I want to talk about was just the arbitrage, where the pension obligation is just an example, and then the other is the pension obligation itself. So we kind of moved to pension obligation, so let's just stay with that for a minute. I'll just notice that in this section, number 5, types of debt, it is called out as something that's allowed. So whether it's short or long-term, it is kind of explicitly allowed in this document, for what that's worth. But I guess I feel like, arbitraging should not be, it seems like, should be sort of barred as a goal in this kind of borrowing, whether it's long-term or short-term. That's kind of,
I agree with
feeling.
you.
Yeah.
I think that the purpose, in this document, it says that the purpose of issuing long-term debt is to further goals of the city. And the city is not an investment specialist. We're not traders. That's not the purpose or in any way the stated goal or operation of the city. And I think that it should be specifically prohibited throughout the document. So I don't know if there's a way to just make that part of the policy that there's no issuing debt for purposes of arbitrage, because I just don't see where we have any business engaging in that.
We can consider that, and again, I'll bring it up and see if it is something we may want to add in. It definitely, if not added to the policy, should be part of like a recommendation from committee to council alongside the policy. And I'll discuss with the advisor too if there's a reason why it's not specifically left out as a whole. And again, if it's something that is a useful tool, and that might be why it's not completely restricted. Again, it seems like it might line up more with short-term debt because that's more for cash flow, but I can check with a consultant about that. And if not, then it should definitely be a recommendation for the committee sees this as something that we should not utilize debt for.
One suggestion might be that in Section 6, where you reference arbitrage as being part of what happens, you could specifically identify the internal controls that are related to that. So if there was a reference there to the whatever policy or sub-policy or statement of, that would be helpful.
Other comments on the type of purpose and types of debt? I think it would be really helpful to know if the idea of pension bonding rests in that short-term debt, item number 2 of section 2, and maybe just spell that out a little bit more, because it does seem like long-term debt is fairly restrictive. It's land, infrastructure, facilities, or equipment. That's it. There's nothing else. I had a question on one of the types of debt under Part 5 of Section 2, Marks Roos bonds. What are those?
Those, and I looked that up when we were first putting this together. It's a specific,
Which page is that?
It is on
6.
page 6.
one of the bullets at the top.
seems like a collaborative.
It's Mello-Roos. That's a right?
No, it's Marks Roos bonds.
I know what a Mello-Roos bond is something that appears regularly on people's taxes and it gets quoted on, but I've never heard of a Marks Roos.
This was a bond pooling act of 1985. So a Mark Roos bond is essentially allowing California governments to bond together for financing. So it's like a pooled bond opportunity.
So several cities could get together to issue a bond.
Yeah, essentially to lower the borrowing costs.
Oh, okay.
Apparently, Mr. Roos bonded, he did a lot of work with besides just Mr. Mello, Marks and Mello. Okay.
I'd never heard of conduit debt before, but
I had to look that one up.
yeah, I had to look that one up.
Like what would be a good example of why someone may do that? So
And so your example there was the nonprofit that might be planning on building low-income housing in the city, and the city would take out the conduit debt,
yes.
give the debt to the nonprofit in exchange for a note receivable from the nonprofit to pay back that debt?
Yeah, and it typically, one of the examples I found, there would be a guarantee on like the revenue from the completed project, basically. So that's like the ability to pay
Got it.
All right. How about section 3? Policy goals related to planning goals and objectives. Does anybody have any questions on that section?
I'm not sure which is the best section for this, but does the debt policy have a clear way of measuring our ability to borrow and communicate that? Like, for instance, can you give us let us know right now what's the Albany's rating, and so that when people do want to have or looking to issue new debt or use debt, how that might affect our rating or abilities to borrow. But can we get as concrete as possible about Albany right now, please?
I believe our rating is an A. I didn't look that up prior to this meeting, but I do believe we have the last rating that came out was, we were, I believe, at least an A. But I can confirm that.
I think we might even be double A.
Yeah,
saw
I didn't
that
want to say
somewhere.
double A, but at least an A we are.
Right.
Yeah.
Double A plus.
Double A
Yeah.
plus, okay, where
The
was
second
that?
best.
I saw
It
that
was
on
in the
some-
KPI report.
Oh, that's right, okay, yay.
Very easy for me to find.
That's great.
Dashboard.
Where did you find that?
That's a good question. I potentially on the website somewhere, but I don't remember.
Yeah, there's a public website, and I can't remember what it is, which lists local agencies in their current rating as of the last rating session, so.
So how is that rating calculated?
If we're meeting the obligations, I don't run those calculations, but it would be if we're meeting our obligations, what our debt limit is, how close we are to it. I'm sure that's all considered kind of like a credit rating for a person.
Well, I just would think that the debt policy should have details about that. For instance, if you say A plus, that doesn't, that sounds good, but it's not. I mean, it's good, but it's not AAA. Is AAA the best?
I don't know.
Yeah, it's a third party. In this case, it's S&P Standard & Poor's that is independently evaluating different municipalities and governments' debt rating. So they're calculating it, and they have a definition somewhere. All I know is AA is the second best.
Well, I think the debt policy should have a way, you have a lot of criteria in here for different kinds of aspects of debt. And I think one of a very crucial ones should have the rating and how the rating is achieved and what would make it risky, the debt risky. And I personally like when we do stuff like this to have concrete examples of, when we issued the 2 new school bonds, 5 years ago, what happened and how that affects, because that, I've been around for a while and a lot of people have been here when that happened. And so I and the fellow members here and the public might understand how these things affect our credit rating, because I think everybody understands credit rating and how that affects our ability to borrow and the interest rates that we have to pay. So how do we incorporate something like that into it? I mean, is there a section in here already that addresses, or is that just not addressed?
I mean, the credit rating would, like you said, it's not really within, obviously the city can make decisions to try and aim for a good credit rating, but we don't make our own. It's kind of outside of our hands. And one piece of advice I've heard from multiple consultants, and when talking about this among staff, is you want to avoid keeping restrictions upon yourself that will require you to update the policy if you need to issue debt. So I could see making a credit rating requirement. I don't know if that's what you're discussing.
A what
Make
requirement?
a credit rating requirement. I don't know if that's what you're leaning towards, but I could see how it may restrict us if we implemented that into the policy, and we would need to amend it if our grading fell below a certain standard and there came a need to issue debt.
Right, so what okay, I'll try again. I think a policy should clearly state a methodology for measuring how a debt that may be issued could be affecting our credit. So that, I work in real estate, so we're regularly dealing with borrowers who are told that they need to pay off their car loan or their other kind of small short-term loan that allows them to then borrow more money on a long-term debt.
So that may be addressed in debt limit. So the policy does refer to the fact that we need to maintain a debt limit and we can't exceed a certain debt limit. And that is something we receive from the assessors once a year. So again, if you go beyond your debt limit, obviously that will likely impact your credit rating and impact the ability or the desirability for borrowers.
So is that detail in the policy, that like a definition of debt limit, and it's brought to us? I mean, because you have a lot of specifics, like there's certain agencies that does this and regulates that and reviews this, and I want to see in the debt policy methodology to understand how any issuance of debt is measured against our credit rating, or how could we, and how, like the good news is, let's say the city builds or allows to be built a very large development that's worth $100 to $200 million, okay? Does that mean that that development, besides generating income, would also create more, our ability to borrow more? And conversely, if we don't borrow more, then our credit rating would go up because our income to debt ratio is getting lowered.
Right. Yeah,
Right.
so the assessor's debt limit doesn't consider the assets of the city. So likely that would result in that if there was a new asset and new buildings within the city, because then that would equal more revenue for the city, right? So that could be, but again, that's the county assessor that completes that.
Well, first of all, can you tell me what do you think I'm asking for? Because you're giving me like, oh, well, the assessor does this. But I thought our job is to kind of review the policy and maybe propose changes. And the chair, wanted to know specifically about the issuance of pension debt. What did you call it?
Pension bonds.
Pension bond, and how that might work. And how do we incorporate into this policy, how can we as a group, and you as our finance director, incorporate the changes that we think may be important?
I guess I'm having a difficult time understanding where it fits in the debt policy. That's what I'm having a hard time. Like, where would that go? What would it look like?
Can I interject?
Is it a
something?
requirement? Is it definition? That's what I'm having a hard time with.
Right up front in the section 1 purpose, the third bullet point says, achieve and maintain the highest practical credit ratings of the various bond and credit types, as well as the city's overall issuer credit ratings. So it's a stated purpose this
It is that.
policy to do that. And I'm thinking maybe it would be useful for this committee and also the council to understand, well, what does go into that credit rating? Because it says we're supposed to achieve and maintain the highest practical credit rating. And in order to do that, who knows that? You know, like who's tasked with doing that, and how do they do it? Is that an outside financial consultant that we hire to help with that, or?
I don't know if I can see if that's something the city's ever hired or brought people into. I think we just have the credit rating done, and we, again, you try to maintain the obligations, and you don't fall behind on payments, and you stay within your limits and your budget, and I'm assuming that goes into it, but I don't know if it's something the city has taken an active role in.
Do we actually engage the services of some rating agency to, they just do that on their own, right? Like
Right.
Forest just does that rating of all these municipalities.
Right.
So I mean, I see your point, that it would be good for us to understand, well, what are the practical considerations that go into that rating, so that you have some specific checkpoints or items that you look at when you're considering issuing debt. And, you know, what would that do to ability to repay and debt service and that kind of stuff? So maybe it's just a matter of getting a better understanding of that bullet point, and, you know, how do they do that? Because it does say they're supposed to achieve the highest credit rating.
I know.
So, but how?
So how do we incorporate into the debt policy our suggestions?
Maybe, if I can make a suggestion, it's just incorporating language saying the city works to understand factors that influence the credit rating issued by third parties for the city, and strives to, what's already in there, it says maintain the highest possible debt rating.
Yeah, I'm
I'm
having a
on the
hard time
S&-
seeing going beyond that, because I don't think there is a specific methodology that you could put in this document, because S&P has a method which is somewhat opaque to the outside world, probably somewhat subjective. And so putting it,
Okay.
that's my perception of it. I could be wrong, but I don't think it's just like a formula that you can just kind of lay out in a document and say, well, then we're going to just work to maximize this formula.
Right, I definitely don't think it's a formula, because like the US credit rating was just downgraded, and it seemed to be opinion-based and subjective and not necessarily objective.
Yeah.
But I am on the website, and it shows, there's a series of videos that says, what is a credit rating? How does S&P determine credit ratings? Here's a guide, how we rate insurers. And essentially, what does a credit rating for S&P look like? There's a number of like things on there that I think the city could familiarize itself with if it was striving to maintain a higher credit rating.
That could likely be incorporated in the training section. So incorporating as part of the training, and I think it relates specifically to disclosure there, but it could also incorporate the credit rating, because that's kind of discussing the city's and the staff's role in debt and understanding it. So I think that might be a good place to put how to understand that piece.
Yeah, there seems to be, there's sort of a limit, there's a debt limit on the upper side, right? It's the last piece of section 5, where it says debt limit, Article 16, Section 18 of the California Constitution prohibits cities, including chartered cities, from entering into indebtedness or liability that in any year exceeds the income and revenue provided for such year, unless the local agency first obtains 2/3 voter approval for the obligation. So I kind of wanted to unpack that, because that's the limit of debt, but that's not necessarily the smart amount of debt for a city to take, right? That's just the upper limit. And so it's saying if you enter into indebtedness that in any year would exceed the income provided for such a year, you have to get 2/3 voter approval. So hypothetically, if your income is $20 million and you are going for an indebtedness that exceeds 2/3 of that, which is whatever number that is, what is that, 16 or something like that, then that means you have to go to the voters for approval of that debt? So is it just the entire debt can't be 2/3 of 1 year worth of income in the year that the debt is issued?
It would be, so I believe, if I'm understanding that piece correctly, that you have to budget for the debt service, if that makes sense. So it can't just be, oh, we have this much revenue. It's like the debt service has to be budgeted within the city's budget and approved that way. So if it exceeds that piece, then that's when it goes to voters and there's revenue on the bond, so hopefully that goes towards it. But I believe that's what that debt limit specifically is referring to.
So they mean if the debt service exceeds
Right.
2/3 of the revenue?
Because that's the cost to the actual, like the actual year-to-year
In that
cost.
year.
Right, yeah.
So shouldn't that, I mean, maybe this is a quote that comes right out of this section, but it's kind of vague the way it's written. I mean, should it say something like, from entering into an indebtedness or liability resulting in debt service costs that exceed income and revenue by 2/3 or something, or that exceed income and revenue? So really, we're talking about the debt service, right? So whatever the principal and interest is on that particular debt for a given year, if that exceeds the income for that year, then that doesn't make sense.
Excuse me, so when we borrowed, I don't know, $10, $15 million or more, I can't tell you, for the last 2 schools that just were built, okay? So Marin and Ocean View schools were just rebuilt. We voted on a bond for that. It was approved. That wasn't reflected, that wasn't paid for out of our revenue.
That's the Unified School District's debt. That's not the city's debt.
But it doesn't really matter, okay. But if we build a new library, okay, which we have done, if we rebuilt this, when we rebuilt this structure here, so much money was raised. If we propose a new something, senior center, anything, we finally get to propose a new high school. Like I said, again, you're going to see the school board. Then when it's proposed, it says that it will be paid for by the assessed value of the town based on $10.05 per $100,000 of assessed value. That's why I want to have, so this is why I would really like to have a special session on taxes. So I don't know how, because I understand that when we pay for the schools, when we raise the money for the schools, it doesn't matter whether it's the schools or whether we raised money to build a structure, a new fire station and police station and City Hall, which we did, our taxes went up to cover the cost. It's not paid out of our revenue stream. It's paid every year. Anyone who owns real estate, their assessed value, there's a charge against that, and the charge goes up based on whatever the proposal is, and then people vote on it. And the same thing on a parcel tax. If we were to do a parcel tax to raise money for some special thing, then it's assessed per parcel across the city. It doesn't affect the city's budget. Does everyone understand that?
No.
No. I'm not following.
Okay, then we really have to have a special session in January on how taxes are paid, because that's why, because then when I say stuff, if you haven't, I
In my
don't
think,
understand.
in my thinking, and please, anyone else correct me if I'm wrong, the topic of this policy is borrowing money, not raising taxes. And those are related in the sense that they allow the city to have revenue, but beyond that, they're completely different ways of financing and running the city. So you're bringing up issues related to parcel taxes in the context of discussing a debt management policy are kind of a horse and a pony. They're
Okay,
different
then-
things.
Then you're picking out, okay, forget that. I said if we wanted to build, when we built the building that we're sitting in right now, okay? I'm pretty sure Judy and I don't know if you were here, we're here for that vote, okay? And we raised $10 to $16 million for it. I'm sorry, I don't have the exact number. We had to borrow the money to do this, to rebuild this building, okay? It's like borrowing money to build a new house. Go to the bank, say, I want to borrow $16 million, and we're going to, okay, and the bank says, we're going to charge you so much interest on this based on your credit rating. The better your credit rating, the lower the interest that you pay, just like when you're borrowing a house. I mean, borrowing to buy a house, all right? That gets paid for every year you pay your taxes, anybody who owns real estate. It's assessed per the assessed value of your house, which varies from property to property. And it's charged at a percentage of 1% of that entire, let's say you have a $600,000 assessed value, okay? When we decided to build this, the taxes went up on everyone's property to pay for that.
I think what I'm struggling with, maybe this is along the lines of what you're saying, is when the city takes on debt, obviously, it takes on an obligation to repay that debt. But there are many ways the city could repay that debt. It could be a parcel tax, it could be a property tax, it could be raising sales tax, it could be any number of things. So I'm trying to figure out, you're kind of honing in on one thing, but I'm trying to figure out, are you saying that when the city takes on debt, it needs to have an explicit plan of how to repay that debt and include that in this whole process, or?
It always does.
It always does.
That's
So
part of
what are you
the-
asking,
part
so
of
then
the
what are
vote.
you asking for? I mean, because you're kind of giving in a specific example of when it's done through property tax, but what's missing from this that you're looking for?
In the policy?
Yeah.
That, I guess because when I was talking about credit, our rating, I thought that the better our rating, the lower the interest rate would be for bonds. And when you are interested in having our pension bond to pay off, take the $45 million that we owe for pension bonds, and we go to some entity that says, we want to borrow $45 million, and that way, and what's the interest rate that we can get for that? The better our credit rating, the lower the interest that would be. And that bond would get paid, I would assume, through the phrase is ad valorem tax, not a parcel tax. So the phrase ad valorem, as to the value of your home, the assessed value. So everyone is told, if you want to have your pension bond, your taxes will go up X amount of dollars per $1,000 of assessed value, correct?
Yes, that's
Okay.
it.
And that's how, and so understanding credit ratings for the city is essential to understanding the viability of borrowing for any bond. And then the total indebtedness of the city to borrow money is limited, I heard from you for the first time, because I didn't know, by the assessor that says you can't borrow more than this amount, or something, you know. I want to know what that is, and I think that any debt policy should have the means for measuring that, as just as every bank and lender has not just a policy, but we now have these intricate programs where they just punch in all these different things. And then it says, okay, you're credit worthy to get this amount of money. So although there may be arbitrary factors in credit ratings with Standard & Poor and the United States, it is also clearly based on our national debt and our gross product, GNP, gross national product. Someone is looking at all these different numbers and saying, okay, and the payments that go in and out from, what do you call it? Trade imbalance. So someone's looking at all of these things and saying, okay, USA, we feel that your rating should come down a bit. And yes, they're making a judgment somewhat. Maybe it's not a hard number. But with the banks, when they're assessing someone's creditworthiness, they have very specific ratios, debt to income ratios, that if you fall below that amount, you can't borrow. And if you follow, or you're going to have a higher interest rate. That's the, okay.
Yeah, well, I think we take the point, and the suggestion would be that we enhance the training section to try to address some of those considerations about credit rating. I would like to see some sort of an example on the debt limit calculation, if that's possible, to get that from the consultant that.
Oh, yeah. Well,
put
and
this
there's,
together.
yeah, I think it would be good to clarify the debt limit as it is in here, discussing it being 2/3 of the revenue. And there's also a California debt limit that we are not able to exceed, so there are two different things there, so I could clarify both.
Okay.
But the California debt limit from the assessor's office, that is based on the assessed value of property in the city. And then this seems like it's discussing more, like I was saying, kind of like debt service, so I can clarify that piece.
I think that would be helpful. So, so I think we skipped around a little bit. I wanted to go back to sort of going through by section, because we skipped over section 3, which is the policy goals related to planning goals and objectives. And there's a sentence in the first paragraph that I don't completely understand. So it says, the city will evaluate the use of financial alternatives available that may include but not limited to long-term debt, short-term debt, fixed-rate debt, variable rate debt, and then here's what I don't understand, excess cash reserves and interfund borrowing. So could you explain what is meant by excess cash reserves and interfund borrowing? Is that simply, instead of borrowing, we use excess cash?
Right, yeah, so rather, if we need to make a large purchase and it exists in reserves, utilize that would be a consideration over issuing debt. And similar with interfund borrowing, it's a similar thing, moving money from one purpose to another. And I believe for that, and I don't know if we do that regularly, I don't believe we've done that since I've been here, that would likely need to be council appropriated, if so, but.
Would that be, for example, borrowing from the capital reserve fund to pay for some other item?
Right, it would be, yeah, something like that. Money was allocated within the existing budget, and it's moved to a different purpose due to some need. that wasn't considered when the budget was put together, or didn't exist, basically.
So you did mention that if something like that were to happen, that would probably have to go to, who would have to approve that?
I believe council would need, because they appropriate, so it would be a reappropriation, I think, from one fund to general fund, or whatever fund is needing the money.
Is that something that should be spelled out in this policy, when council can approve something, when it has to go to a vote? I know that there are, at least it seems that sometimes things don't have to go to a vote, because on that debt limit sentence, it said if it's going to exceed 2/3 of annual revenue, it's got to go to a vote. So that implies that other types of debt do not have to go to a vote?
I believe that is the only type that needs to go to a public vote. The rest will need to be approved by council. Yeah. And I can confirm about interfund borrowing. That may be noted in a different policy, what the requirements of that are. So we can maybe reference that policy, like interfund borrowing per X policy of the city, and if not, then note it here.
So if a debt issuance doesn't go to a public vote, then of course there's no optionality to say we're gonna do a parcel tax to pay for this or something like that. So that type of borrowing would have to just be, the debt would have to be serviced out of existing revenue sources.
Right. Yeah, that's right.
I also had a concern that sort of fits in here, section 3. We talk about, in the second paragraph of section 3, the city will seek to use the most economical financing alternative and will ensure good record keeping. I think that the role of the Finance Advisory Committee is a little bit vague in this entire policy. So I don't have an opinion about where it should land, but does FAC have a first pass at all of these issues, or does it go straight to council from staff? I think we should clarify that, because if you read the mission or the purpose of the FAC, it is to provide oversight and guidance, and it uses the word oversight in our mission. So I don't know exactly how to put that in, and I don't have an opinion about whether FAC should be first pass or pass by, but it's a valid concern related to good record keeping and transparency.
I'll discuss that with management and see where or how the FAC fits into this. That's a good point.
I agree.
Any other comments on that section 3? So then section 4 is relationship of debt to capital improvement program and budget. Any questions on that one? If no questions there, then section 5 is the debt issuance practices. So this is about determining the best method for sale and all of this. Cassie, you had mentioned before that there's a consultant called Urban Futures that helps evaluate do they help evaluate whether and how much debt to issue, or do they help just with that issue, that part of actually putting the debt out there for the market, basically?
Both. So we entered into an agreement. They're our current municipal financial advisor, and so it would be basically any step along the way when the city is looking to issue debt. They also help in, if it needs to go to a vote, doing like surveys with the community. So it's literally from start to finish. They assist the city in issuing debt and also identifying what the most cost-effective or beneficial route would be. So literally start to finish, they're going to assist us.
we on section 5 still?
We're still on section 5. Did you have other questions on that?
Yeah, I thought the final bullet on section 5, second paragraph, determine the best method of sale following may be considered. I thought cost looked so lonely down there, that bullet all by itself. And I wanted to put in the terms of the borrowing, the timeline of the borrowing, and potentially, to Francisco's point earlier, the repayment of that and so maybe flesh that out a little bit more in terms of what that really means to the community.
When you say cost, does that mean just cost of issuance, so the charges by whatever organization or agency or company, bank?
Yeah, it would be considering how expensive it is for us to issue the debt, basically, so.
So maybe it is a lonely phrase.
Do you mean how expensive it is as a one-time cost, or considering repayment?
Interest too would be part of that, yeah. So it would be interest and any fees that would go alongside it. Also, I imagine if we do house it in a third party, what's the cost for that separate bank to hold the debt for us? What are the fees associated with that?
So maybe it's just an elaboration of, short-term costs of issuance, such as fees, and longer-term costs, such as interest.
That would really help, yeah.
And repayment plans, or impact on our ability to repay the debt.
And essentially the trustee cost, I think, too.
Trustee
Right?
cost.
Or whatever you want to call it, the bank that's holding it.
Right, the institution that would hold the proceeds. Right, because that'll have a charge associated with it. Yeah, okay. Anything else on that section, section 5? Then on to section 6, which is debt management and internal controls. Got a question on the first paragraph, second sentence. The city has established internal controls to ensure compliance with the debt policy, arbitrage, and rebate compliance, all debt covenants, and any applicable requirements of state and federal law. So that's a lot. What are examples of internal controls that ensure compliance with those things?
So it depends on the type of debt and the piece being considered. Payment, for example, the person initiating the wire transfer, it must be approved by a second person. It is logged in the financial system by a third person, so there's separation of actual payment. Disclosure is typically done by a third party as well. So our continuing disclosure is managed by a separate entity. So there's a lot that goes into it. And again, it depends on what the requirements are. If there's a covenant, I know that, like, for example, our bonds, in order for us to do our continuing disclosure every year, we need to have the ACFR presented as a part of that. So finding the controls and the means to separate duties out so that one person's not moving everything is essentially the basis of the controls that we have.
So, and that's all, is that all within the finance department?
It is.
That's monitored?
Typically, yes. I'm trying to think if administration assists in any of it. I think it would pretty much be primarily finance department, and administration has view of the accounts as well. So they're kind of more of a oversight rather than the action.
Is it that same financial consultant that helps with compliance? Urban Futures?
Yes. They do the continuing disclosure. And we will need to enter into a second consultant that would be disclosure counsel for any additional bonding as well. So there's an additional regulation on new issuances and disclosure counsel and their need to review and sign off essentially on, and that can't be Urban Futures, that will be a separate entity.
Why can't that be them?
I think, again, just to make sure it's not all one person. It's the same thing as like how you separate duties among staff. You would want to kind of separate the disclosure counsel away from the municipal financial advisor who's advising the city on what to issue, basically.
Anybody else have comments on this section? I guess I had another question, which is in the second paragraph. The second sentence there, it says, in those cases where it's not reasonably possible for the proceeds of debt to be held by a third-party trustee, the finance director shall retain records of all expenditures of proceeds through the final payment date of the debt. So, so I understand that it's best practice to have a trustee receive the proceeds of any debt issuance. What would be an instance where it wouldn't be practical to do that?
I'm not sure, and I haven't seen an example of that with the city. I'd imagine maybe short-term debt for cash flow, potentially. Maybe it would be more costly it would be overly costly to house it separately. That's the only reason I could think it wouldn't make sense.
I also thought possibly emergency situations, borrowing in emergency situations could.
Oh, so you would need it to be like now. That makes sense,
Yeah.
right? I guess I can see that.
Does the city have access to a line of credit with Mechanics Bank or with any other institution?
I believe so. No, we don't, yeah.
So it wouldn't be, if we had to do emergency borrowing, I'm not sure how that would happen.
We just go into our general fund. There's a savings account there.
Well, but if there were, this is specifically referring to borrowing, so if we were gonna
Oh.
borrow on an emergency basis because of some catastrophic event or something, what would that look like? Would we go out to a bank or?
I imagine that would be a short-term debt. It's cash flow, right? You need it now, and like Judy said, you need it immediately, and if it's something catastrophic and everything's depleted, I guess that would be.
I imagine that there would be an emergency declaration and sort of the rules would change at that point, too.
Excuse me, I thought that's what we had to keep a certain amount of reserve in the bank based on our revenue. But it's there for emergencies specifically. That's what I've been told here by the previous finance director. And did I mishear? Because I've talked to city council members as well, and they know that in a case of an emergency, you don't go to the bank because it's an emergency. You have the funds there, and the funds aren't actually earning. What percentage rate are we getting on our money in the bank?
It's a split between LAIF and CalTrust. That's kind of like our savings. That's our liquid investment. That's like our liquid non-operation money. I'm not sure what the interest rate is right now.
And
Approximately.
I think around 4 is the LAIF potentially.
Okay, so if we had to go borrow something from a bank, borrowers have to pay 7-8 now. So it would just go, and we'd have to go through this whole process. Well, we don't have to do a process in an emergency,
Right.
which was your question.
I'm asking in cases where we're taking out debt. So not, when we're not using the general reserve fund, why wouldn't it be held by a trustee? That was my question. And then it says the finance director needs to retain records of expenditures of proceeds through the final payment date of the debt. So I guess what you're saying is that would be an extremely short-term situation, some kind of extenuating circumstances, and would be unusual.
I would imagine. Again, I don't think we have anything like that on our debt schedule, and I don't know if we've had something like that. Again, I haven't been with the city since its existence, but that's the only way I would imagine we would do that.
I just had one other question about a term that I don't know the meaning of, and it's on page 8, under Part 1, Review of Official Statements, Item D. The approval of an official statement by the City Council shall be placed on the agenda as a new business matter and shall not be approved as a consent item. So what is a consent item?
So consent is the council doesn't take action on it. So it would be on their consent calendar, and they review it and they approve the entirety as a whole versus it. So it would need to be a piece of business that the council would discuss specifically, receive a presentation on it, receive materials on it, and they would vote to affirm that one thing specifically. Consent is like, there's a list of items on the consent calendar. Council can discuss if they'd like, but they're not required to.
Not required to.
And they approve in mass versus, yeah, so it's saying you can't do it that way.
So you can't do that with an official
Right.
statement. It's got to be discussed and voted on.
Yes.
Okay.
Excuse me, any consent item on the council agenda can be pulled from the consent calendar and added to the full agenda, as well as members of the public can request that it be pulled from the consent calendar. So it's not a guarantee that they're all going to be voted on at once. And then the item is discussed separately.
Any other comments on this in general?
I just had a general question in terms of when you were looking at this and looking at other agencies or other municipalities and whatever, were there any issues that you kind of weren't sure about, or like, well, some people do this, some people do that, or the advisors were like, well, you could do one thing or another, and sort of judgment calls that you're looking for either, opinions about from us or from the city council?
Again, the kind of like general consensus across the board in the two consultants we worked with this on and reviewing was try not to corner yourself. That was the main thing, and incorporate good things that we saw from different agencies that met requirements and seemed like they were financially conservative while not putting you in a position where you'd have to go through a lengthy process if you needed to issue debt. So that was kind of like the main overarching theme too, updating the policy from the draft that we had and reviewing everything and considering everything as a whole.
Okay.
So I'm not clear if this is an item that requires action on our part, but if it is, I'm willing to offer a motion that, given the commentary from tonight's discussion, I would be willing to move that we approve the debt policy with revisions as discussed and forward it to council with our approval.
And I will incorporate the changes to the sections and send it over to committee, and I'll highlight those in a different color. And then it will need to go through the financial advisor again. So if any changes or recommendations from them, just again, if we're getting into a dangerous area or if they think that we need to edit the language, I can give you that final version too, like once that piece is completed. So I think that'll be a good plan.
If I could offer a friendly amendment to that. I think we do have the option of including a memo from our committee to the council on maybe just further clarification of our opinion or our views on the way certain debt might be used. And the thing that came to my mind was, did we want to make a comment about pension bonding? And not doing that, basically, and why this is not a good time to do that, and some of the reasons that we have, I think, as a committee, that we'd not be in favor of doing that,
We'd not be in favor of doing what?
of using pension bonds to address the UAL problem that we have.
You mean we do or we don't?
We don't. So I think that Mark and I have had meetings on the pension subcommittee about this, and maybe this might be a topic for the next section. But insofar as that we could produce a memo to accompany our approval of this debt policy saying, yes, there's the option to issue pension bonds under this debt policy, but we believe that's not the best course of action right now. And there are a number of reasons for that. One being that the interest rate environment has gone up a lot. The time to do it would have been a few years ago when we were at historic lows, and now we're at really high rates where it would be basically impossible, I think, to generate more investment return than what we would have to pay, what the city would have to pay for those bonds. And then there are additional issues that are maybe more technical issues, but there are all sorts of things that can change the UAL. Actual plan performance, investment performance, number of participants or mortality in the plan, the discount rate being changed, the fact that CalPERS shortened the amortization period by 10 years a few years back. So there are so many factors that are completely outside the control of the city or this committee that I think that, and I don't want to speak completely for you, but I think that we feel that issuing pension bonds would definitely lock us into debt service at a fairly high price, and it doesn't necessarily solve our long-term problem. Factors could increase the UAL by another several $1 million in the very next year, and then we're still catching up. So it's our view that that's probably not the best way to address that problem.
I don't disagree with your comments, but I do see the agenda item as being sort of the policy absent a proposal for a specific bond. So I'm not sure that we shouldn't have a separate agenda item for that before we send a memo. Or we could, we could just attach a memo, assuming that this policy is anticipatory of a pension bond. Not a bad guess, but.
Yeah, I don't know what the, what the sentiment is on the council, and if, if that's something that they're thinking of. So, do we all feel like we'd rather not do the memo and just approve the policy with the revisions, or?
I agree with the sentiment that you're expressing in the memo, so I would second that proposal, as well as the proposal to approve the memo.
I thought that the debt policy was going to address the unfunded pension liability. So this more was just a general thing. And I kind of recalled discussing it in the last few meetings, and Cassie, you were saying, well, we'll deal with that, but, and I said, when would we have that? And you said, I think you said January, and that would come to us and we'd discuss it. But there's still no plan to deal with the unfunded pension liability. Is that correct?
Right, there is not.
Okay. So I misunderstood that this was going to be part of coming up with a plan for that. I had no idea what this was going to look like until I saw it on Wednesday.
So pension obligation bond is an option that the city would not be able to consider without this policy. That's like how that fits into the discussion.
Okay.
Because we cannot issue debt without a certified policy. It's not even a factor we can consider as a plan, or any debt issuance for that matter, without having this policy certified by council.
Sure, but this doesn't say debt issuance policy, it says debt management policy. So that's why I mean, I thought we were gonna figure out how to manage our debt, just like everyone has to manage their budget. So what is the finance department's and the city manager's department plan for addressing, managing the unfunded pension liability, or in what time frame would we be able to see an actionable plan?
I think that is probably a little off topic of this policy, because that, I mean, that is a huge policy, and I think we can talk about that in our agenda item for the pension subcommittee. Maybe it's better addressed right there in that area, because I feel like this agenda item is, do we approve of this policy? Not as much, what's the plan to deal with the pension liability?
I understand that, but I think it's a totally appropriate thing to discuss, because it says debt management policy. And so explain to me how managing our unfunded pension liability is not, I guess it's just in general terms. So how do we?
I think it's just a misnomer, and perhaps I see it referenced in what you sent us earlier by email. It's just called debt policy. I don't know if it should just be renamed, if that's what's causing the issue.
What's causing the issue for me is that I guess I was under the misunderstanding that we would be getting this. And I kind of recall my asking this question multiple times over the last 2 years. And it was always, well, somewhere down the road, once we finish the audit, once we da-da-da, then we have the debt management policy. So the question is, how can we, and then now you say it's an inappropriate topic. Well, when would it, if it's not an appropriate topic, when we're discussing the debt management policy, how can we get to that?
I think of this as almost like a debt issuance policy. This is a policy that must be in place per Code Section 8855 if you wish to issue new debt.
Right.
Yeah. So I have a motion on the floor, and I would happily accept the friendly amendment, having heard further discussion. I don't know if we've had any public comment on any of this, and I'm curious about that. But I don't have a second currently. But my motion, just to reiterate, is to accept the draft of the policy with revisions as discussed at the meeting, and then subsequently reviewed by the consulting team, with the addition of a memo from the committee that we advise against a pension bond at this time because of adverse situations in the financial markets.
So I second.
Just clarification, Cassie said something about doing the changes, addressing our ideas in a different color. Actually, I was thinking about that, so I appreciate that. Those different colored changes would be sent to whom?
To the committee, so that you can make sure
Okay.
that the changes were fully enacted. Basically to show, hey, here's where the changes were in the policy, so it's easy to pick out before sending it on for final review.
And that can just be forwarded, circulated to this committee via email, and
Yeah.
we can send back our comments, if there are any.
Would it just be like redlined, if you know that
Yeah,
term?
I can do that. Yeah, do it.
Track changes, essentially.
Yeah, I'll do that.
Okay, can we have a vote?
Do we need a second? Did you get
We
your
have a
second?
second.
Do we need your public comment before we vote?
We need public comment before we vote?
Yes.
Do we have public comment?
Don't.
We don't have public comment.
Okay, so Chair Trainer? Vice Chair Priven?
Yes.
Member Bowman?
Yes.
Member Kirk?
Yes.
Member Papalia?
Yes.
And the motion passes.
Great, thank you. The next section of the agenda is section 6. So item 6-1 is the 2023 advisory body status update. So I think, in other words, this is sort of like our review of our progress against the work plan.
Yes, and we're trying to get a Word version up. Word is not working. Is it still not working? Yeah, so we have the PDF version, but we will make edits as needed. And we'll make edits as needed. The first being, I'm going to update the attendance. It was 3 and 3. It is now 4 full and 3 with absences. So that'll be the first change.
Sorry, before we move on, did we determine who is going to craft the memo? Because I think it can be one of us or two of us.
This is the memo of,
The memo that we just discussed to go along with the debt policy approval.
Point.
In my mind, it would make sense for the two folks who worked on the bond issue to,
The pension.
the pension subcommittee. Thank you.
I just wanted to confirm
I
that
think
before we.
that would make sense that Mark and I could collaborate on that.
okay.
Okay, so yeah, essentially I recapped, just went through the minutes. Part of that recap, I realized, and I apologize, I didn't catch this before, that the dashboard metrics was voted in to be a subcommittee. It wasn't a project solely, so I added that as one of the items that was worked on, and I also added the dashboard metrics subcommittee to the subcommittee update portion. We can change the name of that. That's what I used based on how the item was voted on. Don't know if there's any additions, again, Greg gave a nice summary during public comment
the
of
public
the
comment
work.
was-
I know, I
That
was,
was amazing. I thought we should listen to the tape again and see if we need to add anything.
I know, he really paid attention. Wish I could have given him this as a task. So yeah, if there's any additional thing, maybe reviewing any of his notes on the achievements of the committee during the year.
And kudos to him for having done that.
Right. So any prospective upcoming items that would like to be included for 24?
Well, before we move off 23, so, I mean, I would be in favor of just kind of re-listening to that section and putting in things that are not in there, because I did have other things, but he covered them, so
Okay.
if that makes sense, there were a lot of things he mentioned that we did in 2023.
I think everything that he mentioned should be added in this to the public record. I mean, if he was accurate,
I
which
believe so, yeah.
believe
is
so.
pretty
Didn't hear anything that
detailed.
didn't sound like it was, yeah.
Yeah.
Which I can add all of that again, and it would make it easy to do since I could essentially list out how it was
Right,
stated in the meeting. so.
because he talked a lot about, when he's raising his hand now, he talked a lot about the budget review and the budget presentation that this committee made to council during their budget study session. I think those are good points to add in there, and can we take public comment right now on this issue, or should we postpone that until we've gone through the rest of our comments?
It's up to you. Oh, this isn't an item that needs to be voted on, so it's somewhat fluid discussion piece.
So
Yeah.
let's just go through the rest of our comments, and then we can take public comment on this.
I guess the other comment I have is that we kind of upped our commitment in terms of the number of meetings that we're committed to having in 23, 24,
That's true.
so.
Moved from 4 to 8, I think, but then it looks like we did 7 what we ended up with this year.
The only thing I would add is in prospective upcoming work items for furthering city council strategic plan is that there will be a pretty significant change at the end of '23. We'll have a new council, and some of us may continue and some of us may not continue on this. So I think it would be wise to add a final bullet point, facilitate the transition to the incoming Finance Advisory Committee for '24, '25. It's something that I think is missing in a lot of the commission work that I've done in the past, has been missing. And I think it's easy enough to sort of anticipate that and put it in.
So, okay, so you were discussing about, sorry, I'm reading Anne's, and the city clerk is responding, so we have 3 new members at the end of '24, right? So you were talking about facilitating the new committee for '24, '25. Okay, I think maybe you said '23, and she was just verifying.
No, I mean at the end of the 2024 year.
Okay, perfect. So facilitating transition to the new, potential new FAC between '24 and '25.
Thank you.
Were we all appointed for a one-year term that ends on December 31st? Or are we saying that we
No.
have another term?
I believe it's when there's a new council.
Got it, okay.
Yeah. 2-year term until end of '24.
Okay.
I think, oh. If someone has a 4-year term, do they have to reappoint people? Or is it just the people who, so there's certain
Yes.
people up for reelection? And if, so,
The answer I'm getting from clerk is yes. They can reappoint, but they have to, at the very least, reappoint.
we have to reapply.
Yeah.
We have to we all.
Everyone
reapplied-
has to reapply.
Because we all reapplied at the end of '22 for this term. And so it's a 2-year term, and then we all reapply at the end of '24, or not?
Yes.
Okay. Any other additions to prospective upcoming work items?
You mean new agenda items?
For the work, basically the work plan for this committee, the status update.
Well, I mean, I think the KPI is, I don't know how much we want to just repeat things from 2023, but
Yeah, I figured it was covered with what we had on 2023, and when we get to it, I was gonna make a motion to make a recommendation to the council around the KPIs. So
okay.
I didn't feel like it needed to go on there too.
It's a new subcommittee, so there will be standing, there's going to be a standing agenda item to hear from that subcommittee as we have the next meetings. So I think it's implied. Okay. So how do you want to handle the revisions? to this?
I can add those and send them to the committee, just again for comment. And, yeah, do you want me to open up for Greg? He still has
Oh,
his
yes,
hand raised.
please, yes. Please, let's take public comment.
Okay, I allowed you to talk, Greg. You can unmute.
Thank you, Finance Director. All I was going to say is to be helpful, I can forward to you tomorrow the 10 points that I mentioned on the front end of this meeting tonight, if that would assist you. And quite frankly, I think you did more than 10 things, but these were things that jumped out at me as I went through each agenda for the 2023 calendar year. So if it's assistance to you, I can forward it to you tomorrow.
That would be great, thank you.
Certainly. Thank you very much again for all the great work this committee has done this year.
Perfect, thank you. All right, so the next agenda item is 6.2 Subcommittee Update Reports. So Pension Committee is listed first on there, and Mark and I did meet and discussed some of the comments from public comment from the last meeting, particularly having to do with the closed single employer plan. And we just had a couple of comments based on research that we did. Do you want to talk about that? I know you updated your pension summary sheet that you're using to track all of these data points.
Yeah, I'm working a little bit from memory because we met a while ago. But I think one outcome is that we were looking for an actuarial study. We have some older actuarial studies, but I think something that was brought up in public comment and that we couldn't locate was a more recent actuarial study. So if there is one, I'd love to see it so that we can also update our information on where we stand in terms of the unfunded pension liability. I think the public comment, I think, also mentioned that there was at one point a big increase in the unfunded liability for that fund, and we were able to trace what it was due to, and now I'm trying to remember what it was.
The discount rate has been fluctuating in that fund.
That's
So
right.
the closed single employer pension plan is not a CalPERS plan. It's just a standalone. And as a result, the discount rate moves around differently than the CalPERS plans do. And the CalPERS plans tend to pick a rate and stay with it for a while. But the single employer plan, I was actually looking at a report that Cassie forwarded to me where they talked about how they calculate the discount rate, and it's a combination of different expected investment performance from the stock, the equities portfolio they have, as well as some of the fixed income assets that are in this particular portfolio for the closed pension plan. And so the discount rate, I'm working off the top of my head, so this won't be exactly right, but I think it was something like 5% for the plan year that ended in 20, then it went down to 2.5, and then it went up to 3 point something. So it's moving around constantly, which sort of wreaks havoc with the UAL, because that's really impacted by that number. So that's a big reason for why that's moving around. But I did see a recent report. I'll leave it to you to look through the report that Cassie sent just a couple days ago. But the other thing that I noticed about the single employer plan is in our audited financial statements for the city, while all of the CalPERS plans are on a one-year lag, so the June 30, 22 audited financials for the city, we're relying on June 30, 21 CalPERS actuarial valuations. But I believe the single employer plan was current as of 6/30/22. So I think there's something different about that not being part of CalPERS, and it's a smaller thing, that we've got much more current information on that plan. And the actual net pension liability that's reported in the city's audited financials is as of 6/30/22 for the closed single employer plan, and it's as of 6/30/21 for CalPERS. So we're getting a mix of data there. But the UAL, I mean, the bottom line is it is just moving around a lot. It increased quite a bit in 21 because they dropped the discount rate almost in half from what it was before. And then the discount rate was moved back up in 22, and that caused the UAL to decrease. So that closed plan was the only one where the UAL actually decreased in 22, whereas all the CalPERS plans, the UAL increased by quite a bit because the investment performance was negative. It was actually a negative return in 22, so they were shooting for, I think it was 6.8. Is the discount rate, and they had something like, what, -5 or -6%
With a
on
one-year
the
lag,
CalPERS plan,
on the one-year lag, right?
on the 1 year lag.
Right. Yeah.
So it's a lot of different factors to consider, but I think maybe the main one is the fact that that discount rate is really fluid on that plan. It is down to only 16 participants as of the latest report, I believe.
Yes, and that is on a lag. It is currently 12.
Oh, it's 12, okay.
Yeah, that's, the last statement was for 22.
Oh, okay. So it's a closed plan, there won't be any more new retirees on that plan. So that mortality will also factor into the UAL. It should make it go down. Okay, so I don't know if we had any other comments about pension topics.
No, only just that we were going to update all the information. The CalPERS reports are available, so we're updating all the indicators of how things look.
And just to acknowledge that the decrease in the number in 12 is people who serve the city very well and we are in their debt. That's all.
Thank you. Okay, I think that's it for the pension subcommittee update. And so now we can hear from the revenue subcommittee.
Francisco, did you want to take anything?
I don't have anything to add, except that perhaps if I wanted to talk about the revenue source from our property taxes, then I could do a presentation in this standing
Great.
thing next month, or, so my question is, is there a pressing big item that's going to happen in January?
We don't actually have a meeting scheduled for January. We have eight meetings on our calendar, so the first one would be February. And the big topic for February will be receiving the draft audit for June 30, 23. So that'll be a pretty big topic. We could probably put the revenue subcommittee property tax update in there, or we could push it to March or the following meeting after that.
How much time would you?
Time, yeah.
Maybe we could get together as a subcommittee and flesh it out and give you an estimate.
Yeah, we had 2 months to figure
Yeah.
that out, or 6 weeks at least, and I'll let you know.
And just to note, in February, I would likely give the update for Q2 as well. So keep that in mind. And again, if it makes sense to have a dense meeting or if maybe pushing it.
So
Would it be possible to have a 6 o'clock start and do a special session for parcel tax update? Or
I'm not sure. I'll talk with clerk.
okay, that might be one way to manage the agenda.
a sense for how long of a topic that would be? Is it a half an hour?
That's a good question. I don't think, what I would like to be able to do is to put together a package that, I mean, it's not actually a very complicated subject. But you have to learn how to read your tax bill and understand. And so it's not going to be, and what I do want is to be able to do share screening and I think, or either have a PowerPoint presentation so that whatever's up on the screen I can discuss. But it's, I'm not going to go through every line item because the line items are fairly explanatory. Vector control. Okay. Let's see, get mosquitoes. But the ad valorem tax is the most important thing, and how that's calculated.
So maybe if you can let us know if it's possible to do an earlier start and we can have the revenue
So 6 PM is fine as long as the quorum is made. It would just be called a special meeting, starting at 6.
So 6 to 7 special and then 7 on regular, okay.
So, do you want to talk and?
We will speak
work on
amongst
that?
ourselves.
Speak amongst yourselves and let us know if you'll be ready to do that for the February meeting. And if so, we'll call a 6 PM special meeting to
So
discuss.
this would be presented at 6.
Yeah, I think
Good,
that, yeah.
okay, no,
Yeah.
I would like to be able to do that.
Okay.
So let us know if that will work, and then we'll add that special meeting at 6 o'clock. And then the other subcommittee is the dashboard.
Just one brief announcement. I just wanted to mention it. The school board, AUSD school bond, school board has decided to add a parcel tax in March. So that's not, it doesn't directly affect our work as a committee of the city, but it does play into the viability of other revenue streams that we might want to consider. So the proposal that will be on the ballot is a 55-cent per square foot with a 3% cost of living increase, and that increase is in perpetuity. So there is no end point on that 3% cost of living increase.
And this parcel tax is an in perpetuity parcel tax?
Yes, it is. It replaces Measure B, which was a short-term tax, and it now will live forever in the city. So the school board is hoping that that will pass and that it will be funds available to support the school district.
So does that replace, there's an outgoing?
Measure B is the one that's expiring, yeah.
And is that an equivalent value, or?
I can't actually say for sure. I don't know.
I think the purpose of it is to be, probably to raise more money and also to be more equitable, as the bigger the property square footage, the more you'll pay. So a small one-bedroom condo on Pierce Street isn't paying the same amount as a 10-unit apartment building or a 4-bedroom, 3-bath house.
I think we can look forward to voter information pamphlets coming with that information soon.
Yeah, I mean, I think that would be part of our that you could do for the presentation, so people really understand that, what it's about. Good timing to help.
Financial Advisory Committee members, hi. I don't know if you can hear me. This is Ann, the city clerk.
Yes, we
Can
can
you guys
hear
hear me? Okay, great. Sorry, I'm sick at home, so that's why I'm participating virtually. Just so if you guys want to know more information, it is on the AUSD School Board of Education special meeting agenda on November 28th. And they have the proposal and all the figured out or presented, attached to their agenda for the November 28th meeting. What I understand is it replaces the current Measure B, which is a $490 flat rate, with 55 cents per building square foot for your parcel.
Thank you.
Thank you, that's good to know. Okay, anything else on the revenue? And the other subcommittee update is the KPI dashboard metrics?
Yeah. So at our November meeting, I reviewed essentially a draft of the KPI report, and we attached that to the minutes for that meeting and sent it to staff. Gathered input and public comment. Kim, I know you weren't able to join, but what I would propose is a recommendation to City Council, like a memo recommendation, saying this is what we think could be valuable. And I would propose actually trying it out in Q1. Cassie, I know you're planning on bringing the quarterly report in February. This could supplant aspects of that, and some of the metrics would actually be duplicated, so I don't think it would be that much additional work. But by the end of the quarter, there was basically a red, yellow, green rating section of the KPI report that the committee here would vote on. We could do that in March potentially, and then send our first KPI report to council and the public by the end of the quarter, and work through any challenges we have in putting things together, pulling the information, just basically throw it out there for a test drive.
I listened to that report from the November meeting, and I thought it was great. I had a couple questions, because towards the end, and Cassie was saying that you feel like you're at capacity in terms of adding additional graphs and things like that. I know some of the graphs are fairly similar to ones that you've added in. And so I wasn't quite sure what we had decided on in terms of, so the things that would be additive, would those be things where we would be able to get a data, like a data table from, finance department, and then we would make those graphs ourselves? Or how's the production of that happen? If it's things that finance department is saying, we don't really have the bandwidth to do these additional things, were we thinking that we would get the data in advance and then just create the graphs ourselves?
Most of the graphs are, or several of the graphs, I should say, are things that are already being produced, or just manipulating data, or taking the graph that already exists in the spreadsheet and just changing the inputs. So if, I don't know, for the first run or so, we need to assist in that process, I think that could work. Long term, I think for the sustainability of this, I think it would make sense for staff to do that. And much of the report is once a year. There's only 2 or 3 pages total on this. So we're not even talking about that many inputs. Much of it is once a year actually pulled from the state auditor site, and then other aspects are, in many ways, things that you're already doing, but pulling it into like in a dashboard type format. So happy to assist through the first process, and then we could decide what's sustainable moving forward.
I'll say my preference would be if I could provide data for you to do it, and that be the standard for this report. And I know that also you had part of the idea was to have the committee vote and make comments on it. And to me, it would make sense if when I'm preparing, like when I was preparing the Q1 report, providing the subcommittee the data to pull the metrics that they need, and the presentation being given to committee for the budget at that time, and then the metrics subcommittee have that report prepared as well, so that when presented to council, that report could go alongside it, if that makes sense. It would be a lot more streamlined. Basically, when council sees the budget update from staff, it would be presented with that metric, rather than now with Q1, it would have to be down the line. So
that makes sense. When is the budget reported to staff or to council?
not until after committee. So it's always reported to committee first, and then after committee reviews it, then it goes to council.
So that'd be in mid-February, for
Yeah,
example?
so yeah, that would be the earliest. So yeah, so the second quarter update would come to committee first, and then the earliest it would be the council meeting following.
I mean, if you're able to feed us some of the information prior to our February meeting, we could bring a draft to the February meeting and talk about our ratings then, and provide it to council along with the budget.
Yeah, I can get in touch with both of you, and we can maybe work out a process to kind of streamline it. Does that
Yeah.
sound good? Okay.
So we should probably meet in late January or something after the data's,
Yeah.
okay?
I'll probably start running early January for final Q2 numbers, and get you what I have when it's available, and then see basically what you guys would need too, so that I'm not overflowing you with more than you need. I'm just getting you the exact data that you need to implement.
And did you discuss how you would determine the red, yellow, or green rating?
Yeah, but that was determined by us, essentially by vote. By this group of 5, our assessment to the city council as to what we thought the status should be for each of those items.
So we get the dashboard, and then we discuss.
So in this case, we would potentially have the dashboard for the February meeting, and we'd give a red, yellow, green rating for budget, pension, general fund, and capital reserves were the 4 items that we had on there. And that would follow the staff's write-up, executive summary.
I know there was discussion, and I don't want to go off agenda point, but there was a request that the UAL be added somewhere on these highlights. And I think that you all had discussed possibly putting them on the dashboard.
Yeah.
Just as, it would be a static number, you could have a trend line over a few years.
I think this was on the version that ended up being posted to the minutes, but I have it, the UAL, and then other liabilities for the last fiscal year, the current fiscal year, and then a few years of projections added on there.
And that would be great, because that's just a static thing. It stays the same until we get this next audit, and then we add another column.
The only item that we would need input from council on were peer cities to potentially benchmark against. There were a number of metrics that we were planning on pulling from the state auditor's report that are published annually. That would be helpful to, what Mark and I discussed was have council recommend who they'd want to benchmark against as peers. We had a bunch of sample cities on there, mostly neighbors, but that might be something that we seek council's input in the interim.
That would be a great idea.
Yeah, totally.
So I can revise my recommendation for a memo outlining the purpose of this dashboard, that we're planning on doing it in Q1, and that we are seeking council's input on other cities to benchmark to, and can attach the mock-up that we have.
So that'll be, all of that will transpire at the February meeting.
That would be the plan.
It's going to be a big meeting.
If the timing doesn't work out, you can send the budget and we can push to March, and this can be our test run to get through the bumps and the warts and whatnot. But do we need a vote on that motion?
To bring
A memo.
To do a memo.
a memo.
I believe so. You have to vote as a committee on like the summary of the memo, I believe, right?
So do we would need to do that vote once we have that memo, right?
So similar to the prior memo, Member Bowman can summarize it, and the committee can vote on the spirit of the memo, and he can draft it alongside another memo, and if that makes sense that it's...
And I can work with Mark
Yeah.
on
Sure.
the memo, so we just have 2 eyes on it. 4 eyes.
3 eyes.
So would you quote a motion for that?
Yes, motion for a memo to go to council recommending the creation of this KPI dashboard for Q1, along with a sample mock-up of the memo and a request for council to provide benchmark cities for us to incorporate.
And I'll second that.
So just a question, when you say Q1, what do you mean by Q1?
I mean, the calendar year, Q1, January, February, March,
Okay.
not the fiscal year.
Yeah, just so, maybe we'll just say fiscal year
So it's-
Q2, because
so
that's
it's
what you
Fiscal
were.
year
Fiscal
Q3,
Yeah.
Fiscal year,
but it's
FY
on
as of Q2.
fiscal year Q2.
Right, but during Q3, okay. Sorry, I just,
Thank you.
yeah.
That's a good
Good
point of
clarification.
clarification.
Well, we want to, are we sticking, we should be sticking with third quarter,
Yeah, fiscal third quarter.
fiscal
year.
third quarter.
Yes. Well, we'll be doing this in the fiscal, we'll be doing this, I'll just state it in simple terms. We'll be doing this in February in review of the quarter that ended in December.
Oh, that's fiscal second quarter then.
Yeah, second quarter.
Yeah. So it'll be for the second quarter, but completed in February.
Okay, so can we have a vote on that?
Is it seconded?
It was seconded by,
Oh, okay. So, Chair Trainer,
yes.
Vice Chair Priven,
Yes.
Member Bowman,
Yes.
Member Kirk,
Yes.
and Member Papalia.
Yes.
Motion passes.
Fantastic. Do we have any public comment on any of the subcommittee updates? No. Okay, so item 7 is future agenda items. Does anyone have any requests?
Just a note, are we not due in February to do an election of the chair? It's just for 1 year.
I thought it was fiscal year, no?
No, it's, no, because the council members who elect us or appoint us are elected in November. And then they take office in December, and they appoint people for January. So it typically runs, if I'm correct, to go from, the first through the calendar year.
That's right. So we would need to have a vote to elect a new chair and vice chair.
Yeah, and we typically done at the very beginning of the session, so that then the new chair takes over that session. Is that right? Sound right?
Yep.
Okay.
That's right. Okay, so we've got that. We've got this most likely special session on the parcel tax and property tax details. We know we've already got the draft audit and the quarterly budget review, budget versus actual review. So that's, and then we'll have standing committee items. Any other agenda items for a future meeting after that?
I do have GovInvest available to give an update on UAL to the committee. They are ready to go when we are. They said they could be ready February. February seems full, so that's something to do for a meeting, maybe the next meeting we have, so.
And it's an 8-meeting calendar running on that fiscal year. So if we did have the first meeting in February, Cassie and I were talking about, we'll get together in January to sort of hash out when all the normal things happen, budget review and financial updates and all of those kind of things. But the reason I'm saying this is I was thinking that if we met in February, we probably would not meet in March, and then we would meet in April, May, June. So then we would have a block of 3 all at one time. Then we're off for July and August in the summer, and then we meet throughout the rest of the fall. So I think it would be February, then not again until March is what we're thinking right now for the calendar, just for
Not
everybody.
again until April.
I mean, sorry, not until April, yeah, no March.
February, April,
May.
May, June,
June, then,
no July or August.
and then
which I
September, October, November, December.
I like that.
So
Does
that's-
that work for you, Cassie?
That's the tentative.
Okay.
I guess there's an outside chance that We might have to push the February meeting if the audit is not ready, because one of a comment, I think, from practically everyone on this committee was that that's a really dense document. It's 200 pages long. We have to have it at least a week before the meeting. So if they're not available, if it's not available, then we would push that February meeting to March instead.
Oh, so it'd be March, April, May, June.
Right.
And then the audit goes to the council when?
After committee, so depends
Okay.
on, yeah, so,
So we could review it in February or March.
yeah, depending on when if they follow through on January 12th, we'll get it to you as soon as we can for the February meeting. Just I'm hoping that happens. So I'll leave it at that.
How is the audit presented? Is it just is it you, or is there some outside person?
Oh, we typically have the agency that does the audit present to committee.
Okay. Can we have them in person?
I can request that, yeah, I'm sure.
Because I'm not happy with having remote presentations. They're hard to hear, and I can't see them, and they can't, just better. We're live now.
I will request that.
Okay. So we don't need public comment on that, do we? All right, so next meeting is tentatively set for February 7th, 2024 at 7 p.m. It's now 9:10 p.m. and this meeting is adjourned.